In this video, we're going to talk about fear and specifically fear of missing out, because if you're a day trader, swing trader, crypto trader, futures trader, whatever kind of trader you are, you know that fear of missing out is a very common emotion in this trading universe. As always, we're going to explain fear of missing out by taking an example of 23rd of March 2022. On this day, I could have made a lot more money than I actually did, but at the end of the day, what matters is that did you stick to your trading plan? And on this day, I did. Let's start with my game plan for the day that I post every single market open day in our Discord group, along with the pre-market webinar that we have before the market open. If you guys want to be a part of our Discord group, the link will be in the description box below. On this day, I was watching three stocks. The first stock is Adobe. The reason is because the prior day, Adobe reported earnings after the market closed and Adobe was gapping down. The after hours low was around $441. So I was watching Adobe for the break of 440 for a continuation towards 430 and 416. And this stock was actually a good play because if you go back and look at the 1 minute chart, it had a very good opening range breakdown right at the market open when it broke the pre-market low. The second stock I was watching is Coin, because Coin is making kind of a bull flag on the daily chart. It has been holding this downtrend line for a while. Recently, we saw 4 green candles in a row with high volume. Then the volume has gone down recently for the past 2 days, and it's been making a bull flag on the 1-day chart. I was watching Coin for the break of 189 or 190 towards the upside, because 190 first of all is a good psychological level. It's approximately the prior day high as well. Plus, we had a few bounces from $190 level earlier this year. That is the reason if we get a break of 190 with good volume, we might see the push towards 195 and 200. And finally, the last stock I was watching for the day, no surprise, is Tesla, because Tesla has been on a huge rally recently. It has moved from $750 and the prior day high was around $997, which is an insane move. That is like $250, $300 move in a matter of maybe few days, 5-6 days, which is insane. And Tesla had a really nice push the prior day. It broke 950 towards the upside. Earlier this year in February, Tesla was holding 950 as resistance. It broke out of 950. A lot of stop losses got triggered because a lot of people were shorting Tesla right here for the break of 700, 750, and those people who got stuck on this break towards the upside, they will have to cover, and that's why we saw a really good push the prior day. On this day, on 23rd of March, I was watching Tesla for the break of $1,000 level. Obviously, it's a very, very good psychological level on Tesla for a continuation towards 1020, but there's a high chance we might reject as well because this stock is very, very extended. So that's why I was watching 980 for downside for a continuation towards 950. Now here's a 1 minute chart of Tesla from 23rd of March 2022. If you look at the pre-market action, Tesla was kind of weak in the pre-market, which is expected because the prior day it had a huge rally towards the upside right here. After the break of 950, it made a high of around $998 on the same day, which is an insane move on Tesla. On this day in the pre-market, Tesla held this $975. This dotted line, this bold dotted line is the pre-market low right here, and this is the pre-market high. You guys can see right here around 975 and 976, Tesla had a few bounces in the pre-market. And also if we go back the prior day, Tesla was holding this 975 to 970 zone very, very nicely. And that is the reason as a day trader, I'm watching this zone 970 or 975 for a pullback entry towards the upside. But if we close under 970, I'm also going to watch Tesla towards a downside for a break towards 950. In the pre-market webinar that we have for the Discord members, I mentioned that if we hold 975 or 970 right at the market open, this level was holding in the pre-market and the prior day, that is a good entry for a pullback for a break towards the upside if the market looks strong and if the tape also looks strong. Right here at the market open, you guys can see this pre-market low acted as a very strong support. At 9:31 a.m. candle right here, we saw a dip towards 976 at 9:30 a.m. candle right at the market open. That dip was bought back up, and even if you enter right here around 976 and if you catch this one green candle, your premiums are gonna pay a lot. That's why it's very, very important to mark your pre-market low, pre-market high, look at the prior day support and resistance so that you can get the perfect entry. I'm talking about this trade, this entry at 9:30 a.m. because obviously my first trade was right at 9:30 a.m. I entered my calls position when I saw a dip to 976. The tape was looking very, very strong. There were a lot of orders going through, the big orders going through about 980. That's why when I saw that there's a dip to 975, 976, that dip was looking really good for a pullback entry for the break or pre-market high. That's why my first trade was right here at 9:30 a.m. candle. Now let's take a look at the recording of this first trade on Tesla and see how I managed my position and where my entries and exits were in real time. But before we do that, make sure that you guys give this video a thumbs up, subscribe to my channel if you are new, and hit the bell notifications because I'm releasing 2 to 3 new videos on day trading every single week. Here's a recording of my first trade on Tesla. I was watching the tape. You guys can see the tape is looking strong. We have a lot of big orders going through around 977, 980, and then there was a big order, 2,000 shares above $980 level. When I saw this, the tape is looking strong. We had a dip under 980, but 980 is holding. There are big orders going through above 980. I placed my order to get filled. I got filled 5 contracts. I'm trading 1,000 calls, same week expiry contracts, and my fill price was 14.90. After the break of 980, my entry was around 978 and 977. I'm clearly in the money. Just to lock in some profits, I took 3 contracts out at a fill price of 16.01. And if you guys ask me why I exited my position so quickly, the only reason is that QQQ was going towards a downside. The tech sector was comparatively weaker. That's why, just to lock in some profits, I took 3 contracts out. At the break of 985 towards the upside, I took another contract out at a fill price of 17.75. For my last contract on Tesla, I held through this pullback. Tesla had a small pullback. It was holding the $980 level, but just before the break of 990, when I saw this rejection around 990, I covered my last contract at a fill price of 19.30, overall making around $1,000 on this trade within the first 5 minutes of market open, which is amazing and an insane risk to reward. I don't have a recording of the next 2 trades on Tesla because, to be honest, I was done within the first 15 minutes. When I caught that first move towards the upside, I thought that okay, I'm done. I just turned off the recording. But on this pullback was very tempting, but I will post a screenshot of my fills right at the top. My entry was right here on this candle. I took partials right here. I exited my whole position on this candle itself, overall making around $200 on this trade. But don't go based on the dollar amount, because level 2 on this trade saved me. Had I held this position for any longer than I did, this trade could have easily been a big losing trade, a big red trade for me. That's why if you're a day trader, it's very important to focus on level 2, and in this instance, level 2 saved me from a big loser. Let's now talk about my third trade on Tesla. That was my last and the final trade for the day. After my exit on my second trade, Tesla had a push towards a downside, but it was holding this 988 and 990 region as support. This region held as support earlier in the morning as well. Right here, we had a bounce from this level. After this bounce, it broke the VWAP, and then on this pullback right here, when Tesla was giving this pullback, this dotted line again is the yesterday's high around $998 level. We had a dip under 998, but we made a doji right here with high volume. I could see on the tape that the buyers are stepping up. The buyers are placing their big orders at the ask price and above $998 level. That's why I'm trading 1,050 calls on this trade. I'm going out the money. I'm lowering my position sizing because I'm already green on the day. I don't want to risk a lot of my profits on this trade because I already caught 2 good trades off the open. My fill price was 8.27 on this trade, and I covered 2 of my contracts right here on this candle at a fill price of 10.21, and I covered the remaining 3 contracts at a fill price of around 9.05, overall making around $600 on this trade. Let's now take a look at my P&L. Overall on the day, I made $1,800 with 100% win rate. So what that means is that in total, I took 3 trades and all 3 trades were winners. So pretty good end to the day. Let's now talk about the title of this video and fear of missing out. Let's first take a look at the first and the third trade on Tesla. My first exit was right here just before the break of 990. Had I held my first position for a bigger move towards the upside for the break of 995 or the break of $1,000 level, I would have made a lot more money than I actually did. I could have easily made like $3,000 or $4,000 on this trade on 5 contracts. Same thing with the third trade right here. My entry was right here. I covered my position right here on this candle. Had I held my third trade, I would have made a lot more money. Again, $3,000 or $4,000 on this trade, right? But you guys won't ask me the same question on my second trade, because my second trade was a similar strategy. I entered on the pullback, I exited right here, but because this trade went against me, you won't think the same, because you are not getting any fear of missing out on this trade. Because when you exit and the trade goes against you, that is normal human psychology. You feel like you are smarter than the rest of the traders. But if you exit the position and the trade goes in your favor, you feel like you were a dumb idiot and you have fear of missing out at the end of the day. Now the question is, was I having FOMO on this day? It's normal human psychology. Yes, I am thinking about the profits I could have made on this day, but at the end of the day, did I stick to my plan? The answer is yes, because heading on to this day, I knew that the daily chart on Tesla is freaking extended. So my plan on this day is to enter on the pullback, and if I get the break towards the upside, I will lock in my profits. If the daily chart was making a triangle or maybe a bull flag or maybe a bull pennant on the higher time frame, I would have held my position for a bigger move towards the upside. But on this day, day, I knew that Tesla already had 4 or 5 green candles in a row. It's very extended on the daily chart. It can reject any time with a big red candle. That's why I just wanted to make sure to lock in my profits. That was my plan heading on to this day, and I did stick to my plan. That means 10 out of 10 on this day. Now the second question is, do I follow the same strategy and the same plan every single day? I would say on 80% of the days I behave like a pure scalper. I take the quick moves in and out. I have made my peace with it. I am a scalper. I just want the risk to reward to be more than 1 to 2 or 1 to 3 or something like that, right? But on 20% of the days, when I see a pattern setting up on the higher time frames, I try to hold my trades a bit longer. For example, if you guys saw the video on Tesla, I made $25,000 towards a downside. In that video, you guys will see that I was watching Tesla towards a downside and I was liking that setup on the higher time frame, on the daily chart, on the hourly chart. That's why I held on to my trades for a lot longer than I usually do. But if I know that the daily chart or the hourly chart is extended, I will just behave like a pure scalper and take my quick moves in and out. That's it guys, but before you go, make sure that you guys give this video a thumbs up because it helps out the channel a lot to grow and reach new traders out there. If you are new, subscribe to my channel and hit the bell notifications because I'm releasing 2 to 3 new videos on day trading every single week. Also post a comment down below on your video suggestions. If you guys don't follow me on Instagram, make sure that you follow me there because those are the people first to know about my green days, my red days, my life outside of trading as well. The link will be in the description box below. Thank you for watching and I will see you guys in the next video.